Flutterwave did not know about it until it hit them hard. The Assets Recovery Agency has confiscated billions of shillings from companies Flutterwave and individuals under the guise of investors and agents. But the writing was always on the wall. Before the Kenyan government went for Flutterwave, it was a Mr. Vala, a Nigerian national claiming to be a Dubai jeweler agent that was caught traveling with a bag of undeclared money on December 2020 at Jomo Kenyatta International Airport. The bag contained USD 800,000, 60,000 pounds, 63,000 naira. My name is Ava with the Money Monkey Africa, and this is the story Flutterwave, scheming founders, and dramatic seizure of accounts by the Kenyan authorities. Please subscribe to our channel and hit that notification bell. The big story came when Flutterwave was hit by the Kenyan government. The ARA confiscated 6.2 billion Kenyan shillings from 62 bank accounts. In a court filing, ARA said that the money was transferred in the disguise of settlement for unverified goods and services. Let us take 2 steps back. What and who is behind the infamous Flutterwave? Flutterwave is a fintech company that provides secure and seamless transaction experiences to its consumer base. Or at least that is how it presents itself going by the latest drama. The payment technology company was the brainchild of Olubenga and Aboyeji, Nigerian nationals and entrepreneurs. It was founded in the year 2016 as a solution to help fix the fragmented payment systems in Africa. The Digital Payment Application Programming Interface, or API, was developed to simplify business operations in the continent by enabling international transactions using local currencies. The platform expanded to over 33 countries in Africa. The San Francisco headquartered startup quickly expanded its user base to Kenya and other African countries, targeting small and medium enterprises. The company serves payment service providers and merchants, processing millions of transactions globally. Its key investors include Greycroft Ventures, Alipay, MasterCard, and Visa. The company enables clients to utilize its API services in customizing payment applications. Its customer base involves notable names like Uber, Jumia, and Booking.com. Flutterwave attracted over $20 million in its Series A extension funding before it began experimenting with solutions for small business that would enable it to use their Instagram pages as e-commerce stores. In Feb 2022, the San Francisco and Lagos-based payments firm raised $250 million in a successful Series D funding round. The fund drive was majorly directed at financing mergers and acquisitions to tap into the ever-growing digital payments market in Africa. In addition, the funds would boost the development of complementary products and promote innovations in Flutterwave's products and services segment. Eduardo Saverin-owned venture capital, B Capital Group, was among the key investors spearheading the growth of Flutterwave in the region. Other investors included New York-based venture capital, Lux Capital, San Francisco-based investment fund, Alta Park Capital, and Boston-based hedge fund, Whale Rock Capital Management. The Series D funding valued the payments firm at $3 billion. This makes Flutterwave the leading payments service provider in Africa, serving over 900,000 businesses globally and collaborating with other fintech firms. Kenya is the payments firm's second-largest market, behind Nigeria. It is in business with big names like Alibaba, PayPal, Min, Uber, Airtel Africa, Flywire, among others. Then signs of dubious practices started to emerge. Earlier this year, in April, Adbola was found to have formed a ghost co-founder identity to have more company shares. In addition, it was alleged that he offered low share prices to company employees looking to cash in. The shares were bought by a firm Adbola owned. A former employee accused the online payments firm of negligence in carrying out its duty, which led to fraudulent activities. The firm was also under scrutiny following an ethics probe in 2018 by the U.S. Securities and Exchange Commission. This was the start of a long list of allegations that would follow the company. The firm's assets in Kenya, worth Kenya shillings 6.2 billion, were frozen by the Central Bank of Kenya following money laundering and card fraud allegations. And the Kenyan government went harder. Court filings disclosed the firm to be owned by Ebola, Samuel, and Christopher, with a Kenyan director, David Elizaphan. According to recent reports, ARA investigations uncovered $5 billion in 29 Flutterwave accounts with Equity, Guarantee Trust Bank, and EcoBank, which were in US dollars, euros, Kenyan shillings, and sterling pounds. Flutterwave also received around 12.4 billion Kenyan shillings in a single Equity bank account between November 2020 and 2022. This portrayed the massive cash inflow the company deals with. However, the funds in the equity bank account were transferred to RemX Limited, a holding firm controlled by Damiran Olufemi and Nayacare. RemX Limited has also had a run with regulation authorities that resulted in 5.6 billion Kenya shillings seizure in April for money laundering probes. According to ARA, the bank accounts of the first respondent received billions, which were distributed across multiple accounts in different banks. The distribution was intended to keep the nature, location, source, or disposition from the radar of authorities. What caught the attention of ARA was the transactions carried out on the same day and at the same time. The cards used in the scheme were also issued by the same accounts. According to the filing, Boxtrip Travels and Tours and Backtrip Travels LLC received 467 million and 436 million Kenya shillings, respectively. The former is registered to a Nigerian, Olufemi, and the latter to Tofumi Swayemi. Elevalat Fintech Limited received 320 Kenyan shillings million between 4th November 2020 and 14th April 2022. However, only about 1 million Kenya shillings was available in its accounts at the time the seizure order was carried out. The firm's directors include Tawari Simon, Jackson Kamenju, and Palliser Limited. Another firm caught in the muddy puddle include Hupisi Solutions, with only about 2 million at the time of the freezing, received 143 million Kenya shillings. From this amount, about 45 million was received from GC Natural and 54 from Flutterwave Payments Technology. The company, owned by Festus Mumo, transferred the money in bits below Kenya shillings 1 million to avoid raising suspicions from the CBK. Subsequently, Cruise Ride Auto Limited received 2.4 million from the payments firm on June 6, 2022. It was later sent to the director, Simon Karanja. A total of 14 million belonging to Mr. Ndij was seized in the crank-up. All these frozen funds were transferred to bank accounts belonging to Flutterwave from different countries before being redistributed to 6 firms. According to ARA, the firm has no supporting explanation or documents to the source of the funds. Thus, Flutterwave is in question of moving illicit funds using its accounts. What does this mean for the promising payment platform? Business Daily reported that Kenya shillings 4.3 trillion was moved via mobile phones in 2019, a 361 billion Kenyan shillings rise from 2018. Technically, daily mobile phone transactions worth an average of Kenyan shillings about 12 billion were conducted in 2019 alone. Internet banking and digital payments were, and still are, clearly a booming niche, which also makes it an easy channel for fraudulent activities. As it turns out, Flutterwave Payments firm is neither permitted to operate as a remittance provider nor payment service provider to merchants in Kenya. CBK listed Chipper Cash alongside the payments fintech as unlicensed to operate in the country. Flutterwave holds that it applied for a license with the CBK in 2019. It also claims to have been in contact with the CBK ever since to ensure they met and provided all the requirements necessary to acquire a permit. The regulator gave commercial banks directives to cease any dealings with Flutterwave and Chipper Cash and freeze the funds to block withdrawal or transfer. Remittance operations in the country are regulated under the Money Remittance Regulations and the Central Bank of Kenya Act 2013. On the other hand, payment services are regulated under the National Payment Systems Regulations and the National Payments System Act 2014. The troubles of Nigerian fintech companies are shocking the financial community. Another Nigerian band linked to a powerful Kenyan politician and 2 other Kenyans transferred 25 billion Kenya shillings in late 2020. This caught the attention of the Interpol and Europe as a possible money laundering activity. The Flutterwave seizure comes weeks after another about 3 billion belonging to a lotion woman was confiscated. The woman is alleged to be backed by 4 Kenyans. The proceeds were from a debit card fraud in a wider international crime syndicate. While it is a setback that 2 of the fastest-growing fintechs will deal a blow to startups, it is unclear how such big firms operated in the country for years without a permit before the regulators flagged them. The government needs to tighten its efforts to crank up money laundering and card fraud activities before it grows out of control. If you liked this story, please subscribe, hit that notification button. Until another video, I am Ava with the Money Monkey Africa, and bye for now.